Hey everybody. So today I'm going to talk about how to get $15,000 to $25,000 above fair market value for the sale of your home. And in some cases it'll be tax-free. I'm not a CPA or an attorney, but I can definitely share my experiences and how I was able to do it tax-free. So 2019, just after Christmas, my wife and I decided we want to move out of state, and we were going to list our house. Ordinarily I would have just listed my house as an agent myself, but Redfin sold a house down the street for $269,000, and I thought it was only worth about $250 max. So I thought, well, maybe they know something I don't know, and I'll reach out to them. So I scheduled a listing appointment with Redfin. Guy came out, did some comps, and this is the email I got from them. Pretty much that our house was worth $235 to $240 max is what they would list it for, and that was including making some repairs. We thought, well, maybe we don't want to deal with listing it and doing it ourselves, even though I'm a realtor. So we decided to reach out to Zillow to see what they would offer. They came back with about $238,000 cash offer, but when it was all said and done, they came out, did inspection, and took off about $12,000 plus their fees and everything. It came out to about $217,000 net. So after the bad news from Zillow and Redfin, we decided to list the house with my dad, who's also a real estate agent. And we knew the house was worth about $235,000 for a quick fire sale to an investor or a wholesaler, up to about $250,000 max to a normal family that's looking to move into a house in our neighborhood. So we decided to list the house for $275,000, and the reason we were able to ask for more is because we were also offering more. And what we were doing is widening our buyer pool by offering seller financing. We were offering certain buyers that ordinarily wouldn't be able to buy a home, at least not through a bank. We were offering 10% down and 6.5% interest rate to anybody that was interested in our home. So instead of 100 people that qualified and were able to purchase the house, now we had 250 people that were able to qualify and purchase the home. It just depends on if they like it. And usually people that are interested in seller financing, they're not as picky because they know they can't get a house anywhere else, and they're just grateful to finally get their foot in the door and, have a home of their own. So who on earth would pay $15,000 to $25,000 more than what a home is worth? I'll give you several examples. Self-employed people that haven't done their tax returns, people that don't have everything that the banks require, bank statements, they don't have a perfect history, story, W-2 job. Maybe they went through a foreclosure, they had a bankruptcy, anything. There's several reasons on why someone might not qualify for a bank, but they would qualify for seller financing. And the nice thing about seller financing is it's kind of a win-win, because you guys get to determine the terms and they get to determine their terms. So for example, the person that ended up buying our house, they wouldn't have qualified with a traditional bank because they had lost their job in California and they decided to make a move to Arizona, and they got another job, and we're also taking side jobs, which the bank doesn't really like income that's not W-2. They'll take it in some instances, but they want to have at least some history. So because this person didn't have the history of self-employment to prove that they would be able to afford the payment, for us, all we cared about was 10% down. That was good enough for us to know, hey, this person's serious. They're going to do anything they can to make their payment. Another reason someone might want to do seller financing is because they're a private person and they don't want someone at a bank to know all their business. They don't want to provide bank statements, tax returns, pay stubs, letters of explanation on anything in their life. For us, it was just 10% down, and we were asking 6.5% interest. With the person that did end up buying our house, we ended up going down to $273,000 and 5.5% interest. Even though we ourselves had a loan on the house, we were still able to offer seller financing because the house after their down payment, they owed about $250,000. We owed about $192,000. So the seller financing was, we were getting 5.5% interest on $250,000. We were then in turn paying 4.5% interest on $192,000. And the difference from the down payment, we got 100% tax-free, which I'll explain later. Here's the best part of all of this. This is why I truly think it's a win-win. Yes, they paid $23,000 above fair market value and a little higher interest rate, 5.5%. Granted, I was paying 4.5, so it really wasn't that much more. They were able to buy a house in 2020 when they wanted a house in a neighborhood that they wanted. If they would have waited to be able to prove to a bank that they could qualify for a house, by the time they would have been able to prove that they could qualify for a house, the price for this home would have been way too expensive for them, and they wouldn't have qualified for it. So they would have had to look in less desirable neighborhoods, or they would have had to look for smaller homes, or maybe even a condo. Or in worst case scenario, they might not have been able to buy a house at all. They would have just been priced out of the market completely. As you can see, Redfin has this house now estimated at $361,000, and this is the same company that said it was worth $235,000. So realistically, I bet they could probably sell this house today for $400,000, if not a little more. There was a house on the other side that just sold for $408,000, about the same square footage, same size. So they definitely made out. We also made out. So it's, in my opinion, a win-win. Now, if the situation reversed and instead of being worth $361,000, it was worth $161,000, at least they're dealing with you. So they're not dealing with the bank where, day one, they miss a payment, 90 days later, they're out on the streets. You could at least work with them if you want to. If you don't want to, if they were a horrible person for whatever reason, you don't have to work with them, but usually they're great people. And in my case, I would definitely work with them. They're paying about $1,500 to $1,600 a month, and we're paying just over $1,100 a month. I could lower their payment down to, break even. We could give them some money to move out if they just say they don't want to stay there anymore for whatever reason. At least we wouldn't just kick them out on the streets like the banks do. Now, for the cherry on top is all the money that we got for the sale of the house was tax-free. The 10% down that they gave us, which we used to purchase our next home, that was tax-free. The money difference between our loans when they do end up purchasing the house completely, that's all tax-free. The only thing that's not tax-free is the interest that we've gained. So the 5.5 minus the 4.5%, which comes out to 1% interest, that we will be taxed on. Do keep in mind, even if you haven't lived there 2 out of the 5 years, there is a partial exclusion down at the bottom there. You can see where you can, calculate proportionally the months you've lived there. And keep in mind, this is also federal tax. Some states do still charge taxes even on the sale of your home. So we got lucky. We didn't have to pay state or federal taxes, but just keep in mind, you might have to pay state taxes. Talk to a local CPA or attorney about it, but in our case, we were able to do it 100% tax-free. Actually, technically, it's not 100% tax-free because we do have to pay taxes on the 1% difference. But hindsight, what we could have done is we could have lowered their interest rate from 5.5 down to what we were paying at 4.5% interest, and then we would have had no interest to pay taxes on, and we would have just raised the purchase price. So instead of $273, we could have charged them $277 or whatever would have been the exact same payment amount. Thanks for watching my video. Hopefully I was able to teach you something, and if you want more videos like this, don't forget to subscribe, and if you wouldn't mind liking and sharing the video, I would really greatly appreciate it. Thank you.